Goldman Sachs just reported a blowout quarter, handily beating analyst expectations across the board. I'm joined by Ken Leon, Global Head of Equity Research at S&P Capital IQ. Ken, the bank posted its highest earnings per share in more than 5 years. All major businesses topped estimates. Shares initially rose on the news, but at last check, they were down. So what has investors concerned despite these impressive numbers?
Goldman Sachs had a blowout quarter. The problem is, the consistency of doing it every quarter. Goldman did terrific in terms of the trading, other client activities. But when you look ahead, compared to the first quarter historically is always the strongest quarter, and Goldman exceeded that. But the level of confidence that Goldman can sustain this or draw a straight line up from here doesn't appear to be the picture. And the big difference from the past was Goldman is dependent on the condition of the capital markets, what their clients do from the standpoint of trading and equity and fixed income. Years ago, you could take some substantial principal investments, get a large gain out of it, and goose up your earnings. So this was all client-driven activity. The market just doesn't believe that Goldman can sustain this through all of 2015.
So with this big question of sustainability, what sort of color did management give on this morning?
Well, I mean, this was a good call to do for management. The numbers speak for themselves, but there's always a healthy dose of caution, as it relates to what can happen even in the second quarter that we're in. So I think, when you take a closer look at the performance, a lot of this was in equities, equity trading, and that was spurred by the strong uptick of performance, especially in Europe, where equities are up over 20%. So Goldman benefited from that. When you look at other areas of the business for Goldman, they were good, but they were not exceptional. So I would say that was the big delta to get such strong results.
Now, are you adjusting your view on the stock following the results? What's your outlook now?
So we continue to have a hold recommendation on the stock. We feel Goldman is executing well, but the ability to get significant growth ahead is going to be challenging. There's also speed bumps or controls as it relates to regulatory constraints, which does put constraints on how much risk they can take on trading floor or what else they can do in the business. So, that's the different environment we're in today versus, when they had great results before the financial crisis.
All right, thank you so much. Ken Leon, Global Head of Equity Research at S&P Capital IQ. And I'm Brittany Umar for The Street.